Welcome to TradeTheNBI.com. This is Sean. This report is for the 18th. Well, it continued. We had the NBI white lead and just a bit of a breakdown of that magenta under yellow was critical. We were still looking at breaking down shakeout and our DOC clear rejection right there to the weak side and just nothing to really provide impetus once the magenta moved below the yellow the other day and we broke that 50% range, got zero help, and it continued to lead to further erosion. Actually held up pretty decent during most of the day, and then I was posting about it still couldn't get over the 23% on the 50K. And we expected the sell-off to happen later in the day, and that's exactly what took place. And not a surprise, we were just wondering who was going to make it to the 0%. Morganachis have been rising, so the pull is towards them when they couldn't hold the 50% with the breakdown. And they had the chance right at the 50%. We saw the move to push back above, but no change in the DOC. As I've always talked about, orange between cyan and red, maintaining that spread. Continuation, and it gets worse when the orange starts to rise, and that's what I was looking for. I'm like, a pivot up here, this is what I mentioned a couple of days ago, would accelerate declines, and it has done in fact just that. From an interesting standpoint, treasuries continuing to improve their yield, and so even despite money coming in uh, as a safe haven, yields are growing. Really makes a case. What do you need to be risking in S&P or even in Nasdaq when you can get pretty healthy return now from treasuries, and something that's more realistic to what's actually taking place than what we had been seeing early on in the year. So that is going to definitely attract a lot of attention, and not only that, is going to bring capital from around the world looking for yield. And that's a bigger problem for the rest of the world, which is going to only exacerbate, if you want to call it stagnation or even recession, because why put money to work when you can earn enough that it doesn't have to work, and then you don't take any risk as far as business in that. We've already seen that in the EU. There's no loan volume taking place. There's already the expectation, well, there was a correction already underway when they raised rates, so that's really going to improve things because economics here in Europe is a very interesting thing. They actually have people that go to school to learn how to mess up economies because that's all they're learning how to do. It's interesting. It's for another time. Oil still holding right around that 80 range, and again, I think there's going to be a back and forth, but I don't see any improvement from a supply standpoint. The only thing that's going to help oil will be lack of tension, but once you create the fear, it takes a while for that to ease out, and then secondarily, you're going to have to see some kind of demand decrease, which poses a whole different issue. If you have demand decrease, then there's obviously economic issues. And we saw that already in China is having issues and the variety. And this is what I was talking about from a euro. It's pretty hard even for central banks to hold up against the push of better return elsewhere. And that is just a capital flight issue. And euro coming off the peak up there at the 112, still within the healthy range. So they're going to get worried until they're down at that 106 range. So then it's not a big deal. It's still well overvalued relative to what you can get elsewhere, which is an interesting thing. Gold making a stand, still horrible from an MBI reading standpoint. Look at this, still extremes all the way under the red line. Not much of a bounce back excitement at all, which is ironic given what you're seeing from interest rates and that. Of course, you can move towards treasuries. You don't need gold. But if oil stays where it is, treasury is not going to be enough. You would have needed to have been in metals as they're going to start to peak. And then you say, oh, but what about crypto? Well, we talked about crypto the other day and how we still had this positive extreme that I was talking about at 27. And so all the headlines I'm looking at, everyone, oh, it's a crypto crash. It's like, really? Really? I mean, we knew that that was the retrace value from like how long ago? So, what are you talking about? This is that excitement. Yes, it happened quickly, but of course it's going to do. It's an illiquid market. What do you expect? I mean, when you don't have liquidity, things move quickly. Welcome to every high beta stock from the 90s and 2000s when just didn't have the volume. No shock. Now, moving even further lower already today here. Now we're down below, so we filled the positive extreme at its low point, which was what, down 26.9, which was right about the open here was 26.45. So that had done it. We're currently right about the same spot. So a little bit of play between there, and you're just going to shake out a bunch of weak hands as usual. But this was all a news breakout in the first place. So what's the shock here? I don't see it, but okay. It was easy to see what was happening. We've been in a continued downturn. MBI white spike here from an ETH. We were looking to see whether or not it would hit the 0%. We saw the breakdown of here when we had the DOC spread at the 50%, and it wasn't going to hold support. And that just caused it to cascade. And that was a pretty strong dip to break to new lows. And ETH has been far weaker than what we had seen from Bitcoin. But then again, Bitcoin had that giant spike relative to the news that really wasn't as much associated with ETH. But again, I say it's a problem if you know that federal governments are going to start issuing digital currencies. They're not going to allow these to be legal tender in their countries. So, yeah, it's going to be an issue. Now, that doesn't mean there isn't a segment of the world that still needs it from its own practical purposes, but relative to a trade standpoint, it does take some luster off of it. When we look at it from the 50K standpoint, we've been, well, a couple of days. This is what we were talking about. Once we moved below the 23%, we've stayed below the 23%. There's been no excitement. So I was posting when we were middle of the day there, like you can look for the late day sell-off. And what do we see? Late day sell-off. Just because that pressure builds when you're not able to break through those resistances, it becomes pretty evident to everyone that there's no sustainability to it. And then they start running for the hills, so to speak. And there are legitimate reasons. I mean, we've talked about all the problems. It was just a question of when would enough money dry up? When would there be enough yield elsewhere to attract money and cause it to take a new home, so to speak? And it found it. And it's going to become more growingly evident to those as economic conditions become more representatively deteriorating. Overall, though, in fairness, the market has held up pretty well, and we're still quite well valued given the fact that, despite all the gloom and doom, the Fed has actually been able to keep things from completely collapsing so far. So early morning, you can see we had a little sell-off from the pre-market rally, and then they tried a little spike back up, but all it did was get to the 50% of the original Morganacci lines right there, and MBI white took the lead a little bit of time before the magenta crossed below, but once it did, you get the signaling there, and that's pretty darn clean, and that took place all throughout the day. There was a little attempt in the post-market here, but that's faded off pretty quick because what excitement is there in the EU to be lifting anything? Not a whole lot. So that's the long and the short of it. Not parabolic or gloom and doom. It's just what we see from the readings. As always, trade well. We'll talk to you later.